Hello traders, hopefully you're doing great. In this video, we're going to talk about how simple can trading get without need for excessive amount of indicators. All we need to do is we need to be patient, wait for high probability setups that come to key entry point, and we need to execute properly. In this video, we're going to talk about how to read the price action, how to anticipate high probability setups, how to read the market context, and how to follow the trendline rules properly. So as the day started, it was a strong bullish uptrend. We have a series of higher highs, higher lows. Price is above this exponential moving average, and the first thing that we need to do is we need to find a channel, because always price is some form of channel in some form of pattern. Price is never just randomly floating on a chart without rhyme and reason. So you guys can see I have a channel working higher, and I'm doing the same thing for the corrections. I'm drawing the shortened trend lines as well, because trend line rules apply even for these corrections. Now I have a two high probability setups right here. I have a second entry long, two-legged pullback at key entry point, and I have a failed second entry short at key entry point. And the reason why I'm only looking for bullish high probability setups, because EMA hasn't even let price close below it once. This is clearly a nice bullish uptrend. When I see a first break of this uptrend, naturally, according to trendline rules in price action, we expect for price to create a new extreme, new high. Only after new high is formed, we expect correction or straight up reversal. And there's the first two-legged pullback. There's the new high, first entry long, pullback, second entry long. But notice how far away you are from EMA. There's a gap, and that means that this setup is getting riskier and riskier. Strength is so strong that it worked anyway, and it is not a bad setup by no means, but it is slightly aggressive, and I think it is better to wait for price to come to your key entry point and really capitalize on the high percentage you can get. By that time, price is consolidating, which is congestion, and you don't want to take entries in this congestion, bunch of overlapping bars. You have a new extreme form for the uptrend and priced pullback. This was the crucial and pivotal moment of today's price action, because from this point on, once you get a new high, you're expecting for price to correct or either straight up reverse, but none of that happened. Price created a one-legged correction to the exponential moving average, and take a look how EMA kept holding price the entire time, and it resumed the uptrend. This can happen. So according to trendline rules, you expect a correction or straight up reversal, but a lot of times you observe the EMA, and if EMA keeps holding price, you don't argue with the market, you adapt, and the trend may resume. The trend may be so strong that it will resume. Okay, so this is the good indication that the uptrend is resuming right here. As the price is pushing strongly like this, I know that there's most likely a bigger pattern developing, and my first channel was this, because this looked to me like a spike and a potential channel forming, and is holding price nicely. It ended up overshooting by a lot, so I decided to delete this and find a steeper channel, but we're gonna get to that. So we have a one-legged pullback to this key entry point right here for that time, and this is the first bar that closed below the exponential moving average since this entire uptrend has started, and this is according to Al Brooks, the first EMA gap bar. This bar will a lot of times be bought, but remember, we're looking for high probability setups. I don't want to take chance on just first entry. This uptrend is still a little bit lackluster. This uptrend is strong. This is still just developing, and it is better to wait for high probability. So we have a first entry long, pullback, second entry long. This is the first high probability setup. This is the two-legged pullback. You closed above EMA, you're confirming the trend line. This is what you are waiting for, and take a look what market did. Unfortunately, I missed this setup, and take a look, we would have had a gigantic runner. But as the market is pushing higher, and as market is pushing higher, you're not taking these bunch of first entries. You're just being patient. You wait for two-legged pullbacks. Now, this is the first indication that this is going to be a very strong uptrend. I'm going to draw the better channel that you can find, because the important thing is that there's even a chance to find a channel like this. Let me quickly delete this. You keep looking as the day is developing for multiple patterns, and none of them are wrong. All you need to pay attention to is that this is a strong uptrend, and you just look for price to get to EMA, to exponential moving average, until you find a clear proven trend line. So don't be worried that you don't have the perfect trend line yet. It's okay. You just keep trying, and eventually you will find the best trend line for the day. Okay, so as the market keeps pushing higher, you ignore a bunch of first entries, and this is the first sign this is a strong uptrend, because every single first legged pullback is working. Okay, you guys can see bars are small, they're creeping higher, and you guys can see first entry worked, first entry worked, first entry worked. So this is a good sign that this is going to be a very strong uptrend, and it looks like it may reverse any second, but it just keeps going, it keeps going, it goes in common sense. You're expecting for market to tilt any second, but it just keeps going, all right? This is a clearly strong bullish structure. As the market keeps pushing higher like this, all you need to think about, I do not counter trend trade this strong market. Take a look how price is pushing above the EMA strongly. It is tempting to pick a top. Forget about picking a top. Take a look how many longs would have worked if you just bought almost every single pullback. You always follow the trend. Trend is your friend. So market is pushing higher and you have a new high per century long. At this point on, once you bounce off the key entry point, you're expecting for price to create a two-legged pullback and then you will go long. However, market is so strong that only first entry worked. And this is once again confirming the strong bullish momentum. Now, take a look what you have here. Once again, you have a new high, you have a first entry long again. And this is why you want to take the two-legged pullback, because sometimes the first entry will work, sometimes it won't. It is always better, if you want to play it safe, to wait for the 2 attempts for the market to create and confirm the high probability setup. Now, in back of my mind, these are the 2 setups that I'm looking for. Trading is simple. You don't need overcomplicated strategies. It sounds too fancy. These 2 setups, this is what you keep in mind. And you have a new high, you have a first entry long, pullback, second entry long, and notice how there is a break and a new low of this downtrend. And remember what we talked about, the trend line rules. After new low, you expect correction or straight up reversal, and the bigger pattern is bullish. So we are satisfied with the break and new low, and we just look for reasons to go long. Unfortunately, there was no trigger above this bullish bar. I'm going to mark it because this is a great entry, but take a look what you have. You have a push above the EMA and you have a high low setup. High low is a confirmation setup of high probability setups. So this is a 2-legged pullback of 2 key entry points. And if you're unsure whether you get your key entry point right or whether you're reading the market correctly, you get an additional opportunity to jump on board on a higher low setup in the strong bullish uptrend. All right, market push higher and you have a new low, first entry short, little push higher, second entry short, failure. Big bullish bar of 2 key entry points. It's getting a little bit big, but I still think this is a decent setup. You're still following the 2 key entry point. Structure is clearly bullish. However, after that, there was a 5 bar, 6 bar stacked next to each other. So you have a 2-legged pullback and a second entry long, but I just don't think you can justify going long here. Yes, this is a strong uptrend. Bunch of first entries are working, so this is a good indication this is a strong uptrend. But when you see 4 or 5 dojis stacked without any clear direction, what can happen? You can go long here. You're gonna get stopped out just 1 tick and it will reverse higher. For that reason, I think this one is risky. You can take a chance here, but I would really be patient here because the congestion is really bad. All right, but I went long here and you guys saw me posting the runner. How did I survive this? Because normally you put the runner at break even and the runner came back and it would have stopped me out at break even. But I took a look at this entire structure. I saw how many first entries are working and it told me that this is a really strong uptrend. And I scalped on 5 contracts and I let 1 for runner. So what I did, and I only do this rarely when the trend is extremely strong, put my the last contract below the signal bar, and I decided to risk, let's say, 2 points worth of stop loss on 1 contract in hopes of making 6 points, 10 points, 15 points, 20 points. It's always about the odds. It's always about the numbers. It is much better for me to risk hitting a 1 stop loss on 1 contract. It is worth for me to get a decent runner on a day like this, because days like this are not going to be your everyday market. So this is why I played like I did. You don't want to play it every single time. Most often than not, always put it at break even because you want it to be just a bonus. But when it's such a strong uptrend like this, and by the way, the first entries, when they are working, the market still has to be 45-degree angle. If it's a steep market like this and you see first entries working, you remember steep markets are going to get reversed quickly. So that's not how you want to play. You want to play 45-degree angle market. As the market is pushing, your job as a trader is just to wait for the 2-legged pullback at key entry point. This is what you do. You just take 2-legged pullback and you wait it out. You wait hour and a half and you take 2-legged pullback. You wait hour and a half and you take 2-legged pullback. You wait hour and a half and you take 2-legged pullback. Trading is not about taking every single setup you see. You guys can see there's a new high, first entry long, second entry long, off the key entry point in a strong bullish uptrend. It seems that market is going to reverse any second. It keeps going, it keeps going. I even exited my runner way earlier than I should have, because this is how it goes against common sense. It looks like it's going to reverse any second. There's going to be deeper correction. No, it won't. Market just keeps going and keeps going. So unfortunately I left the money on the table, but take a look how important it is to incorporate the runner. You take one entry right here and you get 15 points. You take another entry right here, let's say you get 10 points. So this is what trading is about. Your job is to make money on these easy days. This is where you make a lot of money. This is where you capitalize. And even if you're break even on the rest of the days, if you catch 3 days like this when you make a lot of money, the rest of the days you can be break even and still make decent living. You don't have to be perfect on every single day. There are going to be days that are tricky and there's going to be days that are hard, but there's going to be days that are really easy and you just need to wait for market come to you. It was really slow. It doesn't seem like that at the end of the day, but market was really slow and you really had to be patient. But you have a first break of this spike and a channel. So what you're expecting according to Trendline rules, you're expecting for a new high to be formed. It is tempting to start selling, but don't. This is a clearly strong bullish uptrend. And remember what you said at the early of the uptrend, I will not counter trend trade. So I'm drawing the short-term trend lines in the opposite direction. I have a break, first leg to a new low, pull back, second leg to a new low. We're below EMA, so I don't want to pick bottom here yet. I want to see a price to confirm the bullish momentum that we are truly resuming the uptrend. I have a first entry short, strong push above EMA, second entry short. This is the high probability pattern. This is the failed second entry short correction category. Why? Because the uptrend is in play after two-legged correction and I'm expecting a new high to be formed. This is simple price action, high probability setup. EMA is holding, nice bullish bar with a gorgeous entry. This is a textbook price action day. I wish we had more days like this. Unfortunately, it's not that easy. I'm a little bit mad at myself that I scratched the runner earlier because I really thought I was going to play it safe. And of course, this runner would have been still alive. So never give up on these runners. So this was the day for the day. Hopefully you guys enjoyed the holidays. It's pretty straightforward. And I'm going to talk to you in the next time. Take care, buddy.